Did you see Super Bowl 56? Well, if you did, you may not have realized that you were watching history repeat itself in real time. And this has nothing to do with the game. If you saw the Super Bowl, here's what you were actually witnessing. That's right, Super Bowl 56 will go down in history as the bursting of the crypto bubble. And just as the case with Super Bowl 34 in the year 2000, which marked the bursting of the dot-com bubble, it was this series of outrageously expensive, yet truly cringeworthy Super Bowl commercials that marked the beginning of the end of a speculative bubble. Now, to understand what we witnessed in Super Bowl 56, first we need to go back in time to the distant past, the year 2000. Picture, if you will, an age of utter madness. Somehow the world had just managed to survive the two-digit madness of Y2K, but even more ridiculous than what George Lucas had just done to Star Wars were the valuations in the NASDAQ Composite Index, in particular, the dot-coms. Companies with virtually no earnings and no redeeming qualities beyond the phrase .com in their name. Well, in 2000, those companies were flush with cash after years of dumping more and more shares on the market, shares that investors just couldn't gobble up fast enough. So what do they do with all that money? Why not drop $2.2 million each on 30-second time slots in the Super Bowl? And that's exactly what they did. And those ended up being some of the worst commercials in the history of the Super Bowl. How bad were they? Oh, you just had to ask, didn't you?
I just want you to stay.
Oh yeah, that bad. Well, those commercials ended up being the harbinger of the bursting of the dot-com bubble. It was only a few weeks later in March of 2000 that the market reached its peak and thus began one of the most rapid and violent contractions in stock market valuations in history. Turns out it was a really bad idea to draw attention to the fact that your company is burning through your investors' cash like it's going out of style. Now that our history lesson is over, let's fast forward to the year 2022 and Super Bowl 56. Well, here we are back in the present, and it seems like the crypto exchanges are just so eager to repeat the same mistakes that the dot-coms made in 2000. Once again, Super Bowl 56 saw some of the worst Super Bowl commercials I've ever seen. How bad were they? Well, let's start with Coinbase, the one everybody's talking about. That was nothing more than 60 seconds of a QR code bouncing around like a screensaver. At $7 million per 30-second slot, that means Coinbase spent $14 million on that ad. And what do you think happens when you put a QR code in front of 100 million pairs of eyeballs? Well, a lot of people pull out their phones and scan it. And in a shocking turn of events, that resulted in a massive surge of traffic to Coinbase's website. And guess what happened? The same thing that happens every time there's a surge in traffic to Coinbase's website. The website went down. So what just happened? Coinbase just spent $14 million to beautifully illustrate the unreliability of their website, which they are now famous for because every time there's a run on crypto, Coinbase goes down for maintenance or some other technical difficulty that makes it impossible for you to get your money off of Coinbase. Folks, this is just one more reminder. Get your coins off of Coinbase because they won't be there for you when you need them. The safest place to store your crypto is in cold storage in a hardware wallet that you control. My personal choice, I use the Ledger Nano X, and if you want to check that out, there's an affiliate link in the description of this video. The next cringeworthy commercial we saw was eToro's commercial that actually featured the phrase "to the moon," which, by the way, mark the date and time. That is the date Moon officially became uncool, which brings me next to the Crypto.com ad featuring LeBron James. There was actually a release of a trailer for this commercial a few days earlier with the folks who worked on the ad at Crypto.com talking about how the commercial portrayed LeBron James in this humanistic and ultra relatable kind of way. Yeah, LeBron James is totally relatable. The guy signed a contract right out of high school and started making hundreds of $millions playing in the NBA. I mean, this is so relatable, I feel like they're telling my story. After all, I got a JV letter in my junior year of high school, so I can totally relate to LeBron James. And by far the most cringeworthy of all of the crypto ads in the Super Bowl was the FTX ad that actually included the phrase, "Don't miss out." Gee, what does that sound like? Could it be fear of missing out or FOMO? You know, that psychological phenomenon, that is the one classic mistake that crypto investors make over and over again, is that they FOMO in at market tops. Gee, FTX, way to spend $7 million to draw attention to the fact that we're at a top and remind people of the one mistake they're likely to make if they use your product. Money well spent, FTX. But just for a second, let's forget just how awful and what a grotesque waste of money these commercials were. Folks, we are at a market top, and this is not the only indicator for crypto. We're now a little over a year and a half since the last Bitcoin halving on May 11th of 2020. If you don't know what that is, a halving is an automated phenomenon that is built into the source code of Bitcoin. Periodically, every so many blocks that are mined in Bitcoin, the payouts to Bitcoin miners get cut in half. Now, the reason why this is such a powerful event is because it reduces the amount of new Bitcoin that's entering circulation. That is a very deflationary event. And since the halving in May of 2020, Bitcoin has rallied from about $8,800 to as high as almost $69,000. And this was not a unique event. This was actually the third Bitcoin halving that's happened. There was previous Bitcoin halvings on July 9th of 2016 and November 28th of 2012. In the year following the halving in 2012, we saw the Bitcoin price rally from about $11 to almost $1,100. And in the year and a half following the 2016 halving, we saw the Bitcoin price go from about $650 to almost $20,000. So we have a pretty clear pattern that's going on here. In the year to a year and a half following a Bitcoin halving, the price of Bitcoin rallies several X. Well, the all-time high in Bitcoin was on November 9th of 2021. That was almost exactly a year and a half after the previous halving cycle. That was the market top, and that's why people say we're now in crypto winter, which is that doldrums, the low period in between halving cycles following these big peaks. Now, I also want to draw your attention to this pattern. This is the market cycle of a bubble. This is actually a visual representation of human psychology. You have the initial run-up in Bitcoin following a halving, and as the price slowly starts to rise, that FOMO starts to kick in until eventually it turns out to become a mania as all the media attention piles in and money just piles into crypto. You get too much euphoria that builds up in the markets and the price goes vertical, and then eventually it fails and it crashes down. And that's usually marked by some kind of rampant fraud that develops in the crypto space. In 2013 or early 2014, it was the Mt. Gox hack that ended the run after that first halving. In 2017, 2018, it was the OneCoin Ponzi scheme and the BitConnect fraud. This time around, a lot of people think it'll be Tether. But this time is not any different, folks. This is now the third iteration of this cycle we're seeing playing out. And the fact that these crypto companies are blowing millions of dollars on these awful ads is just one more sign that that euphoria has peaked and we're on our way down. Now, what does that mean for you and for your crypto investments? Well, I can't tell you what to do with your money. All I can tell you is what I'm doing with my money. Now, even though I believe we're currently in the process of this bubble bursting, which has happened several times already, I still believe in the long-term viability of cryptocurrency and everything that it offers, namely Bitcoin and Ethereum. I'm a lot less excited about some of those altcoins. 99.9% of those are garbage, and I don't touch them. But despite this big price decline that we're currently in, which may go much, much lower, I still believe Bitcoin will be over $1 million by the end of this decade. Why? Because there are two halving cycles remaining in the 2020s. The next will occur sometime in 2024. And when that happens, I think this cycle is going to repeat itself. And then again, sometime around 2028, the same thing. And if you look at the kind of moves that Bitcoin has made after some previous halvings, I actually think that $1 million number is a conservative estimate after two more halvings happen. And that's why I never try to time markets in cryptocurrency. I just continue to dollar cost average in. I buy a small amount every week. I use an automated app called Swan to do that. If you want to check out Swan, there's an affiliate link in the description of this video. You'll get $10 in free Bitcoin if you use that link. Again, I think the top is in for this cycle. I think we could be headed lower, and if you use previous cycles as a guide, there could be some major fraud on the horizon, probably Tether, that brings us much lower. But I still believe in the long-term story of cryptocurrency and Bitcoin, and that's why I continue to dollar cost average in. And if you want to know more about that strategy, check out this video about Bob, the world's worst Bitcoin investor. Thanks for watching. Till next time, live small and dream big.